This is Justin AMZN on Tuesday, June 1st, 2021. So let's start just looking at the daily. I'm zoomed way in. I'm actually going to maximize this. We pretty much put in a high at the 21 exponential and put in a low at the purple line. We have really compressed. We've got one dot on the squeeze. I don't know how much more sideways this can go. I didn't expect it to go this sideways already. Um, I mean, could we have a couple more days in here and let the 21 really come into the purple? Like maybe this week we could put in a couple more days sideways, but I don't think this is going to keep going that much more. Today was a bullish gap and go. It gapped up, opened up above yesterday's, almost above the high, and sold. I mean, it ran up a little bit and then sold off. We had a bullish gap and go on this day. We had a bullish retest gap on this day. We had a bearish retest gap here. We had a typical gap here. So everything is played out to be not very bullish. These are bearish candles. Obviously, they're red, but they haven't also broken down yet either. We have really just compressed. So I don't think it's going to last much longer. I think we're going to start moving here. And I mean, this is the first time we've touched this purple line since these 3 days. I just wonder if we're going to flash down here. Well, not flash down. I'm sorry. I don't know if we're just going to break down here and if this is going to be the start of a bigger move down, or if we'll have some other bullish move, something happening that's bullish. We get above the 21, get a solid close above it. I mean, even this day I was saying this isn't a solid close above it. We've not had a close above the 21 since this bearish day, but we haven't had a bullish close above it, breaking above it since this day way over here. So, that's what really needs to happen. We need to have a solid bullish day, getting a close above the 21. Even if we open, like say here and go up through it, then I think, okay, we could have some bullishness coming in. I would be concerned that we've got just some kind of a relative high through here, like where I'm holding the cursor, like 32.90. This seems to be, some resistance here. This obviously poked through a little bit and then right back into it here. We could turn this kind of symmetric triangle into a triangle that's got kind of a flat top and, increasing, higher lows here. And that would let us, kind of hover around the 21 again a little bit more. So I'm thinking a little more bearish just because we put in so many bearish candles. It looks like we could just continue. Bulls really have not done much for this since before earnings. But it's really just kind of a wait and see which way it's going to break. That's the thing with symmetric triangle. It can go either way. So let's jump into the 5-minute here. So we ran up right into a resistance, same resistance we ran into or almost ran into on Friday. And then today we put in 2 really nice inverted hammers and just broke down. There was only a couple places you could have played this for a 3-hour move. One of them was from those hammers, just getting in like 4 or even at 5 by 4. So 4 by 3 or 5 by 4 and just ride that up for 3 hours. That would have worked. This kind of a retest here on this candle, you would have been buying right on that candle. So getting in 6 by 5, that would have worked to go up to 9 for a 3-hour move. And then this little retest here into the 21, almost into the 21, you could have gotten in here just buying on these candles, getting in 650, even 7 by 6. 7 though, it hit a high of 10. I don't know if you bought at 7, if you would have been able to exit at 10, if that would have filled or not. But that was, those kind of 3 places you could have been getting in and having a 3-hour move there. Everything else was smaller, everything, at least on these options. So the 3,300 call and the 3,150 put. And one other thing I wanted to point out with this candle, it was a little bit of a high wave candle, about 32.30. So we're 70 points or $70 away from 3,300 for this one. And the price was about 550. And we're about $80 away from the 3150 price, and we're at $6. So the put is more expensive when it's further away. And sometimes puts are more expensive anyway, just because people are protecting the downside. It makes sense. I just think that there's a little more of an opportunity for the market makers to make more by keeping that more expensive. And if we do start going down, they don't have, they have less premium to give up on the calls and less to add into the puts. at this point where the puts were a little more expensive. So into the end of the day, we're flipped. So we're now about 70 points away from the put, and we're about 80 points away from this call. But clearly something has happened that has, drained more value away from the call. It's also a Tuesday. We have less days left in the week. Um, but I always want to keep an eye on what these option prices are when I get, kind of in the middle between some main strikes, So, starting the day out looking at the 3350 because we were way up here, about 100 points away from both. And then we quickly moved down in here where the 3300 call and the 3150 put, they were, about 70 to 80 points away. And so it just made for a better kind of, I don't know, comparison between what could move. But we did one of these days again where we just went sideways for hours. There's a little bit of scalping you could have done in here, buying at 6, selling at 7, buying at 550, selling it not even 650. So, the move was a little bit less. It was even worse on the call. It just hovered at these prices. If you got in, you should have been just getting right back out on the call. At least the put actually had a little bit of a move here. This looks like it started to break down. You got a lot of volume at the end of the day on the put. So a number of these things are they're showing me that I think we got a little more bearishness to go. So hope this helps. This is Justin AMZN. Thanks.